Less than pop class equals data end equals 399, data start equals 75 greater than. Today was another roller coaster ride on Wall Street, with the Dow Jones Industrial Average caught in a whirlwind of economic tension, uncertainty, and market volatility. The root cause? China's powerful retaliatory move against President Trump's sweeping new tariffs, which are being called the most aggressive in a century. Less than pay class equals data end equals 813 data start equals 401 greater than. Early in the day, the markets showed some initial resilience. The Dow opened higher, and there was a burst of energy from tech stocks. Apple, Nvidia, Tesla, and Palantir all jumped more than 3% as investors seemed to bargain hunt. Trump, never one to stay silent, took to his Truth Social platform with a loud and confident, "Be cool," and even called it a great time to buy. But the optimism didn't last long. Less than P class equals data end equals 1204 data start equals 815 greater than as details unfolded about China's retaliation, an 84% tariff on U.S. goods, and the European Union's own countermeasures in response to the U.S.'s 25% steel and aluminum tariffs. Investor confidence quickly faded. The Dow hovered near the flatline, up just 0.13% by midday. The S&P 500 edged up 0.2%, and the Nasdaq held a slightly better gain at 0.9%, though still well off the day's highs. Less than P class equals data end equals 1583. Data start equals 1206 greater than. Behind these numbers, though, is a much bigger story. We're seeing global markets in turmoil. Japan's Nikkei dropped 4%. South Korea's Kospi officially entered bear market territory. European markets weren't spared either. France, Germany, and the UK all saw major losses. Meanwhile, in a surprising twist, China's Shanghai index bucked the trend, finishing more than 1% higher. Less than P class equals data end equals 2016. Data start equals 1,585 greater than. Oil prices collapsed. U.S. crude fell 6% to $56 a barrel, and Brent slid below $60. Investors are betting that the trade war could slash global demand for travel and shipping, hitting oil hard. At the same time, gold rose 3% as people ran for safety. But oddly enough, U.S. Treasury yields are going up too, suggesting some are pulling out of bonds altogether. It's an unusual combination that signals confusion and fear in the market. Less than P class equals data end equals 2337. Data start equals 2018 greater than. And speaking of fear, the VIX, Wall Street's fear gauge, spiked above 50, a level we've only seen twice before, during the 2008 financial crisis and the 2020 pandemic. CNN's Fear and Greed Index is flashing extreme fear, and investors are holding their breath as the S&P 500 teeters on the edge of bear market territory. Less than EP class equals data end equals 2745, data start equals 2339 greater than. The backdrop to all this is a deepening global trade war, with President Trump doubling down on tariffs and China responding just as forcefully. The Trump administration slapped tariffs of up to 104% on Chinese goods, and many other countries are now facing a new 10% universal import tax from the U.S. The EU isn't backing down either, warning of its own measures unless negotiations yield a fair outcome. Less than P class equals data end equals 3146, data start equals 2747 greater than. We're in uncharted waters. Businesses and consumers alike are bracing for higher costs. Hiring is slowing. Spending is cooling. And the market is reacting with intense volatility. Whether this all leads to a full-blown recession or a market recovery will depend largely on what happens next in the U.S.-China standoff, and whether global leaders can steer the ship before it hits an economic iceberg. Stay subscribed for more videos.